So, welcome everyone. Can you guys just drop a hello in the chat so I know if you can hear me? And also, this is a quick promise, guys. This session assumes 0 experience, so you don't need to even know, you don't need to know what a candle even is. So you don't need to have ever placed a trade. We're just starting from the very beginning, and every word gets explained when it comes to the order flow footprint and a candle. So that I wanted to make this as easy as possible in plain English to learn, just because I know a lot of verbiage gets thrown around in the markets, and I can assure you that 90% of people have no clue what some of the words people are throwing around, So I think it's the best to kind of explain it in plain English, and then, go from there. Okay, and if you guys want to go to, it's called propfirmtrend.com, and up on top there's a little course. Just go back to home. Oh, not Market Hub. Here where it says more, you can go to Order Flow course. You can actually Stock Learning Hub, Crypto Learning Hub, Futures Learning Hub, but Order Flow course, it's just going to show you guys. I put this together about a year ago, and it's been on here. I don't think anyone has really taken advantage to kind of go over it, but this is some of the stuff that I use, and it will show you guys, explain more things obviously in detail. I'm not going to go into the whole detail of everything of this. You guys can read that on your own. I'm just going to do some of the order flow footprint. For example, from yesterday, I'll show you guys some of the things that I looked at when I was trading. I still have about 10 minutes before it starts, but I just kind of wanted to hop on here and talk. Hello. Good. Awesome. Thank you guys. Yes, if you guys are here, let me post the Onyx. I need to find the website. If you guys have any prop firm accounts that has Rithmic, you can actually log into, let me get you guys the website. It's called Onyx. It's free. I mean, you don't need to buy anything with, here, actually, let me do this. Okay. This is going to be recorded, yes. Okay, there's the Onyx website. Okay, I posted in Discord, and let me post it on my stream if I can find it. Okay, and I'm going to post it in the chat. Okay, let's see. There we go. Okay, so basically this is what Onyx looks like. So let's say you have, so yesterday actually, just for the purposes of the webinar that I was doing yesterday, I got a Lucid account, and then just click on the Chicago area because that's going to be your closest, and then sign in, maybe because I'm already signed in. So I passed a eval yesterday and got funded yesterday. So you go here and click on the footprint. So let it load. And I'll go over this at the end as well. This is just kind of little bit of a glimpse before we get started. I don't want MNQ. Hang on. Okay, maybe I have to do MNQ first. I always go to NQ just because, so, you know, when people are putting on size, I want to see the size in NQ versus, you know, MNQ, just because it's 1/10 of it. Oh, it logged me out on my other one. Okay. And also I'll do a giveaway. There's a link you guys can click on in the chat. It says Gleam, but it's I'll be doing a drawing of a Lucid account live here in the stream. Not sure why this is now taking this long, because it never takes this long. Maybe because you guys are watching and it's shy. Hang on. Just make sure I'm gonna log out. I just want to make sure I don't have one open somewhere else, because I think it only allows one. That's not it. Okay, that's not it. But on Onyx, you can actually place trades on there, guys, too. But I am so used to using this. This is a Trade Devils. It is a third-party add-on for NinjaTrader, for Sierra Chart. I can't remember if it's Motivate for the other one, or I'm not 100% sure, to be quite honest. But you guys can check that out if you want. All right. Okay, so this is what it looks like. Okay, let me bring Onyx over here. So yeah, you can actually trade on here, even if you didn't get the platform, as long as it's a rhythmic connection. I think the accounts, or sorry, not accounts, let me see something. Which prop firms it supports. Okay, so Funded Futures Network, daytraders.com. I'm just going to name off the ones that I know. So Tradeify, Lucid, Take Profit Trader, Blue Sky, Apex, Bullinox, Earn to Trade. There's a bunch of other ones, and then Rhythmic, Paper Trading, Rhythmic 1. So I'll get started in a couple of minutes. Yeah, so Onyx is only for Rhythmic accounts, but Order Flow Footprint through NinjaTrader, like I have it for Tradeovate. So if I have my Tradeovate accounts, I have them all linked on NinjaTrader, and that's where this one, that's why I use this one, because I've always used it. But NinjaTrader doesn't allow Rhythmic accounts, so it's kind of a... Okay. Let's see. And then, just so you guys know, I will answer any and all of your questions at the end. I will not look at the chat because I get trolls coming through, and you guys know I have like stage fright. But no, regardless, I don't want to get off track, because I'll get sidetracked if I don't Let me just put my phone on do not disturb as well. I get sidetracked. So I'll go through everything, and then at the end, I'll even if you guys are typing in questions, that's fine. I'll see them at the end. I'll go through both chats, and I'm gonna wait a few minutes and get started. Also, kudos to you guys for showing up on a Saturday morning to learn. I promise you, if you are, or those that don't take education seriously and don't take the initiation to learn, they're not going to make it in trading. You are not going to make it by trying to copy somebody's signals, call outs, whatever it is. It's just, it doesn't work. If it worked, everybody, would be copying somebody that's the best in, and be billionaires, right? The thing is that there's so many, criterias that go into it, and it comes with discipline, the amount of capital you have, and we all have a different type of tolerance. So that's kind of learn how to fish for yourself. And when you actually start to apply that, others come for confluence. So like for me, I'll try to get education or learn or whatever it is to just get confluence in what I do. And then, everything else kind of helps me, like with when I'm trading with my analysts. If we're all looking for longs, that gives me a lot more confluence than just, me by myself, for example. But that comes from, you got to learn how to look at your own stuff and master that. So, all right, well, let's get started. So, basically, drop a hello if you guys can hear. And like I said, this session assumes zero experience, so you don't need to know what a candle is. You don't even have to ever place a trade. It's just we're going to start from the beginning, and I'm going to explain everything, and you'll basically understand what the market actually is and what those candles on every trading screen mean, whether you're looking at regular candles or the order flow footprint, which is the candles that are kind of like an X-ray you see inside of inside of the candle. And so I'll show you guys that special kind of chart, which is the footprint. It lets you see inside of that market who's buying, who's selling, who's winning, just in plain English. So all right, well, let's start with the most basic question there is, and that is, what actually is a market? So forget the charts for a second. A market, or any market, stocks, gold, Bitcoin, it's just an auction that never stops. So on one side, we have buyers, people who think the price is going up. On the other side is sellers, people who think it's going down. And the price, well, the price is nothing more than the last deal those two sides agreed on. So when you see gold tick from 2400 to 2401, for example, that just means someone actually paid 2401 and a real person made a real deal. So that's basically the whole event. That's the most important idea of the day. Price doesn't float around on its own. Every tiny movement happens because somebody somewhere made a deal. And if every move is made of deals, then if we could see the deals, we could understand those moves and hold that thought. So one thing I do want to say, I did say it earlier, but those of you that are joining right now, I will answer any and all questions at the end. So if you guys do have a question, post it. I'll go back through and answer them. So I'm not going to check the chats. If you tag me or anything like that, I'm just not going to look at it because I don't want to get sidetracked. All right, so now in this, not everyone in this auction behaves the same way. There are two kinds of people in every market. And basically, it's patient versus impatient people. So in every market, there are two kinds of people. The patient ones put up a price tag. I'll buy, but if it drops, to 100, they place that order and they wait. Okay. Maybe they wait all day, maybe they wait all week. They're not moving the price. They're just standing there with a sign. And then there are the impatient ones. They want it now. They don't haggle. They don't wait. They walk up to whoever is holding that that price tag and says, "Fine, deal." And the instant that they do, a trade happens. So basically, price moves when someone loses patience. And if impatient buyers keep taking every price tag sellers put up, price climbs. If impatient sellers keep dumping into every buyer's tag, price falls. So if we could measure impatience, who's desperate and how desperate, we'd know who's really pushing the market. And you want to remember that because that's exactly what the footprint chart measures. Okay, so let's take a look at how traders normally watch all of this. So the candle. Okay, this is a regular candle. The shape is called a candle, I guess. It's how almost every trader on earth looks at price. It's simpler than it looks. So a candle is a little diary of what price did during one window of time. So let's just say 5 minutes. It answers exactly 4 questions. Where did price start? How high did it go or did it get? How low did it get? Where did it end? And that thick body shows start to end, and the thin lines, those wicks, show the extremes. Ended higher than it started, and we color it the way lower the other, so that's the entire concept. Now, a full chart is just these little diaries lined up one after another, telling the story, over hours or days. So far, so good. Now, candles are useful, but they have a big problem, and that problem is why, today's webinar exists. So here's the candle's weakness. It tells you what happened, price went up, but never who did it or how hard they had to fight. Okay, so it's like reading a football score, 2-1. Okay, but who attacked all game? Who parked the bus and defended? Was it a lucky goal in the last minute? The score can't tell you, and 2 matches that both end 2-1 can be completely different games, and I think we saw that with Spain and Argentina. Same with candles. A green candle might mean buyers were genuinely strong, or just that sellers stepped away for 5 minutes. From the outside, those look identical, right? From the inside, they're opposite stories. So the question becomes, can we look inside? Yes, that's exactly what a footprint chart is going to show us, or what it is. So let me show you guys a candle the same way, or the same candle, but with the doors open, and that's the footprint. Okay, so if you look at a real chart, or this, apparently somebody says this is AI slop. This is not AI slop. This is NinjaTrader, and it's these are live trades, so just kind of very interesting how people these days say things. So this is, if you look at this candle, this is a footprint candle. Same 5 minutes, same price move, but now the doors are open and you can see every deal that happened inside. Now, don't let the wall of numbers intimidate you. There are only 3 things in here. The middle column is the ladder of prices. Mine is actually like on the right side, so you can change that up however you want. But the number on the left of each price is in magenta color. Deals that happen because sellers lost patience at that price. And the number on the right in cyan, deals where a buyer lost patience. So let's read one row together. At 21,872, 155 deals came from impatient sellers, and 310 deals came from impatient buyers. So buyers were twice as desperate at that price. See, you're already reading that. So price moves. Remember, I said price moves when someone loses patience, and this chart is really, or a map of lost patience, price by price, and that's all footprint is. Now, if buyers and sellers are playing a game inside every candle, wouldn't it be nice to have a scoreboard? Okay, so the scoreboard exists, and it's called delta. I know it's a scary Greek name. Kindergarten math, though. Add up all the impatient buyers in the candle and add up all the impatient sells. Subtract it, and it's done. So, more impatient buying than selling, delta is positive. Buyers won the candle. More impatient selling, negative, sellers won. Close to zero, nobody won. The market is just breathing. Now, here's why this number is gold. Sometimes the score disagrees with the picture. A candle can close green, price ended up, while delta is negative. From the outside, it looks like buyers won, but inside, sellers were the desperate ones. When the picture and the scoreboard disagree, you want to believe the scoreboard, and as the candle can lie, but the deals can't. So that's who won. Basically, next question is, where did the biggest fight happen? So, second question, you ask every candle, where was the crowd? For every price, add the left and right numbers together. That's the total deals at the price. The price with the biggest total gets highlighted, and traders call it the POC, or point of control. It's just a fancy name, but simple meaning, it just means the busiest price. So think of a candle as a house party, and the POC is the room where everybody was hanging out. So here it's at 21,872, 465 deals, nothing else comes close. Okay, so why do we care? Well, because busy prices are prices the market considers fair. So both sides were happy to do business there, and when the busiest room keeps moving up, candle after candle, the whole market is agreeing on higher and higher prices, and that's a healthy uptrend. Looking from inside. Now, third and final question, and this is the where did one side completely overpower the other? So one thing I do want to reiterate. Actually, I'll go back to the other slide in just a bit. But so every price level is a little tug of war, okay? And when one team shows up with 3 times the people, that's not a fair contest anymore. That's a statement. We call it an imbalance, and it's where big, serious money leaves its footprints, okay? So I'll keep it simple. We compare diagonally. So the buyers at one price against the sellers one step below. Why? Because of how the auction works. Those are the two groups that were actually pulling on the same rope. So the good news is you don't have to calculate any of this, okay? So everything I just went over, I don't calculate any of that. I'm not good at math. I feel like sometimes I'm dyslexic in math and I don't like math. But the good thing is that your software draws these for you. It calculates this for you. Your job is just to understand what it means, okay? So basically, it just, on this, on the imbalance, one side overpowered the other right there. Now, if you look at the picture, buyers overpowered sellers 3 separate times. 4.2 times stronger, and then 4.7 times, then 3.4 times. 3 wins stacked on top of each other. That's not random shopping. That's a team that decided to win. So you see the gold dash right here? That's the one spot buyers did not win. 140 buyers ran into 155 sellers, standing like a wall. Now remember that wall, it's going to be on the next slide. But, you know, so what happens when a huge crowd pushes with everything they've got? The price doesn't move. Now you're going to meet that wall. So absorption and technically the wall. So last concept, and one of my favorites, is absorption. So picture a crowd pushing against a door, hundreds of people shoving with everything they've got, and the door doesn't move an inch. What does that tell you about what's on the other side of the door? So on a chart, that's absorption. And a flood of impatient buyers hits one price, giant numbers print, and price just stops. So massive effort, zero result. It means someone big and patient is standing there, calmly selling to every single one of them. You never see them push. You only notice the door won't open. So here's why beginners should care. The crowd doing the pushing is usually people like us, and the wall is usually the professionals. When the crowd exhausts itself against the wall, price very often snaps back the other way, and the crowd gets hurt. So that's resistance, okay? The footprint is the only kind of chart that shows you the wall before the snap, and that's the edge. So, okay, deep breath, guys. Let's put this whole thing on one screen. And so basically, the entire toolkit on one screen, 3 questions asked in the same order on every candle. Who won? You check the scoreboard, which we're going to look at delta, okay? 2, where was the crowd? You find the busiest price, which is the POC or the point of control. 3, where was the fight? One-sided. Look for the arrows and the imbalances. So you want to look at the stacked imbalances. And that's it. That's basically, that's the skill. I mean, it might take you a minute per candle, but with practice, it's going to start taking like 3 seconds. And honestly, it kind of becomes fun because every candle turns into a little story about the crowd and, you know, people fighting over money. But right now, you guys can type some of your questions and I will go back through. I do want to show you guys something here. So when most people think that they need to read the candle, you know, left to right, you know, like this. That's not how footprint candles are read, okay? It is more like that, okay? So it's diagonal. Let me see something else quickly. I want to find something that I did yesterday. It's a little bit different. So was this like easier to understand in like layman's terms, if that makes sense? Okay, let's go here. I can kind of recap a little bit of it, but basically, you know, a footprint candle opens those doors and in the magenta, contracts sold at the bid, which is aggressive sellers, and on the right, contracts bought at the ask are aggressive buyers. So that's one thing that a lot of, I notice a lot of order flow footprint teachers are getting confused about. It's the flip. So bid is aggressive sellers and ask is aggressive buyers. It's the same candle, but that's how you know, every candle on the chart, you know, we've got bid volume, which is on that left column, and those are the sellers. And then ask volume on the right column are the buyers. So basically the point of control, which here it's kind of highlighted in its little color, is just the price with the most total volume, so busiest level of the candle. And then 4 is the delta. So if you add up these numbers, you're going to get this. If you add up these numbers, you're going to get that. You minus, you get the, sorry, you add, you get the delta. And so basically total ask is 998, total bid 460, delta plus 538. So buyers were obviously more aggressive. And let's see for a second. Okay, so if we look here, delta is the most important number on footprint candles. So even if you don't have any, if you're just looking at a basic footprint without any bar markers or anything like that, what you would want to do is look for, you know, the delta. Okay. Order flow footprint has to have delta. I've actually seen people talk about order flow footprint in using a regular candle, and that, what the hell? That's that is not order flow footprint. I don't know. Apparently ICT is telling people that that's order flow footprint. I don't know, but that's not true. You have, you know, it's kind of like reading the tape within a candle, and if you can't see the tape, where's the footprint? Where's the order flow? But basically, you know, you just, the delta is going to answer one question, and who was more aggressive? Was it buyers or sellers? And positive delta, obviously the buyers lifted the offer harder than sellers hit the bid. Negative is obviously the reverse. So near zero, nobody committed. That's just the market breathing, and that's usually a candle to ignore. But you know, basically the price tells you where the market went. Delta tells us who had to work to get it there, and then who got trapped along the way. So this is point of control. Just like I said, it's just the busiest price level. So on point of control, we do look to see left and right, because we're looking for each price level. Okay. Whereas on the imbalances, it's diagonal. And that's what a lot of people get mistaken on. So, you know, why would we care about the POC? Well, that's the busiest price, and it is the accepted price. It's basically where both sides agree to do business. The point of control drift up candle to candle, and that's acceptance moving higher. Drifting down, acceptance moving lower. So this here, you know, is basically that imbalance, and it's a price level where one side showed up with at least 3 times, you know, the force of the other. And here's, as I mentioned a little bit ago, where people get it wrong is reading it right to left, or left right, whatever you want. But that's not how you do it. You do not compare the bid and ask on the same row. Those two numbers never fought each other. They're just snapshots of different spreads. The real matchup is diagonal, so you follow the orders or arrows, you know. Each one starts at the ask of one price and lands on the bid one row below. That's where aggressive buyers actually met the resting sellers. So, you know, the ask on here, 118. At 21,875, bid one row down, which is 28, and 118 divided by 28 is 4.2 times buy imbalance. Now, you know, you can walk these arrows down just like that, and you know, you've got 4.2 times, 4.7 times, then that dash gold one here. At 21,873, Ask 140 against a bid of 155, which is 0.9 times. So the bid was bigger. Sellers put up a wall there and absorbed the buying. And then that 3.4 times at POC. So basically the 3 cyan arrows plus 1 gold wall, that's basically the whole war. And a row is, 1 price level, not necessarily 1 tick. Okay, so an NQ example here, the rows are 1 point apart, which is, 4 ticks. But the mechanic is identical either way, ask here versus bid 1 row below. Now, what does the number like 4.2 actually mean? Well, like I said, you don't need to know math. You don't need to let these numbers scare you or anything like that. It's just a ratio. So if 100 sellers show up, to a fight and 420 buyers show up, well, buyers are 4 times stronger. So basically, it's just the bigger number divided by a smaller number, and that's it. Below 3 times, you ignore it. It's just noise, the normal push and pull. But 3 to 4 times is, real imbalance, and 4 to 10 is institutional size aggression. Now, 10 and above is rare. That's someone with serious size that made a decision at that price, and those levels tend to act as support, or act as support and resistance for the rest of the day. So, and the special one below 1 times, that means that side being attacked was actually bigger. A wall of resting orders ate that aggression. So that's absorption, and absorption is basically where reversals are born. So platforms default differently. I haven't used Atlas or Sierra Chart or anything like that, but NinjaTrader, I think NinjaTrader ship at 1.5 times. Trade Devils is at 4 times, but I teach, sorry guys, I teach 3 times because it balances signal and noise and liquid futures. So let's see. 1 candle. Okay, so here's the same candle. But if you can read it, walk it bottom up, the way price actually moved. So buyers came in hard at the bottom, 3.4 times imbalance right at the POC, which is 21,872. They kept pushing into 21,873 and hit a wall. 155 bids sitting there, basically absorbing, and the imbalance died at 0.9 times. Someone was defending that level. Then they grouped. Then the buyers regrouped and broke through anyway. So 4.7 times at 21,874, 4.2 times at 21,875. 3 stacked imbalances around 1 defended level that failed to hold. So that's what I teach, is 3 times. But if you only saw delta plus 538, you'd know buyers won. You wouldn't know that they had to fight through a defended level to do that, and that a defender just got ran over. But that's basically the difference between price action and order flow. So, how do we do this live, candle after candle, without freezing? Well, when you pull up a footprint candle, and I'll pull them up in just a second, you read it the same order, in the same order. So first, delta, who won. Second, POC, or point of control, where they fought. And then 3, the imbalances, where one side overpowered, which we read diagonally. So, when you're delta, POC, imbalances, those 3 seconds, 3 questions, next candle. So you just want to train that sequence until there's muscle memory. The speed comes from the order, not from talent. And I will say that and when I first started, utilizing order flow footprint, I mean, when I saw the chart, I'm like, okay, this looks like the Matrix. I'm not gonna ever learn. These numbers are moving too fast. Obviously, you guys have seen candles on NQ and this and that. However, I don't need to. I've had trolls say, "Oh, she, she's reading order full footprint, but she can't even see the numbers inside." That's right. I don't need to because I have, see this thing on the bottom? It's called volume delta, max delta, minimum delta. This here gives me the snapshot of what happened in here. And also I have these bar markers. Okay. Now most order full footprint does not have these, so I don't need to know every single thing, or I don't even need to know what all of these bar markers mean, because what starts to happen is when you are trading, your brain starts to recognize patterns. So for example, delta rise, or delta drop, delta sweep, you're going to see some bar markers that are at the same bar markers almost every every candle. That's just noise. Okay. You don't need to know all of that. Let me actually find something for you guys real fast. So, you guys can go to thatpropfirmtrend.com. It's a free course on, what these bar markers do. So for example, delta rise, it's 4 consecutive bars with increasing delta, and it shows buyers or sellers gaining control, and market is or might be, starting to trend. So same thing when we have decreasing delta. Delta sweep indicates a big trader entering to push the market. For shorts, red bar plus market sweep, plus strong negative delta. So that kind of, you can go through what are sweeps. Aggressive buyers or sellers pushing price rapidly. They leave small volume nodes behind, which is gaps in volume. So you can see that through 000 volume, like at the ask, and then sweeps can extend to the right for fixed bars. So again, point of control, value area, unfinished business. This is the one I actually talked about yesterday, and basically it's just a presence of bid traders at high or ask traders at low, and movement has not yet been exhausted. So high probability price will return to that level, and it marks incomplete auction process. So yesterday we saw that, but I'll go through some of my key ways that I look and trade order flow footprint. Let me just check on this call because it came through on my do not disturb, so I just want to make sure there's no emergency. Let me get a drink of water, and then I'll go through how I look at order flow footprint. Alrighty. So yesterday, so those of you that know how I trade or the technical analysis, I use order flow footprint around the technical analysis that I've always used. So like even on regular charts. So let's pull up TradingView quickly and I'll show you guys. Okay. All right, let me pull this down. Let's just go to the 1 minute for showing this. Okay. So, see, I have a key level here at 354. What I do is I look for, I look at my order flow footprint around my key levels. So here is 353.67, which is up here on the 1 minute. Let me just kind of do this to show you guys. When I look at order flow footprint, I'm looking at my, entries or exits or whatever it is, I look at it on the 1 minute. I do have the 5 minute up just to kind of see, the bigger picture. But for example, I always say, like, if we are looking at a specific level, I'll say if we flush through, come back, retest, and reject to take a trade. Okay. So yesterday, this is my key level, 353, posted in pre-market. We flushed through. We went from, 396 was the high, low was 335. So my key level was 353. So we flushed. And then we try to go back up and retest, reject. We kind of stopped almost halfway of this candle. And the next candle, so I wouldn't have taken a trade here. But if you see, we had a negative delta down on the bottom, minus 240. And then the next one is 65, which, remember I said when it's a lower number, it's just the market breathing. And then we had another minus 125. Okay, so negative delta. And on this candle, when we tried to push, it got, to 350. So no, it didn't retest 353. But on a $28,000 instrument or 28,000 point instrument, it rejected at 3 points away basically. So you can see that it was having a harder time to push through this. And you can also see we had negative delta again. This is where I would enter a short. Okay, so we went from 338. Oops, sorry. What is up with everybody calling me? Alrighty, sorry. 330. I lost my train of thought, guys. Sorry. This candle here, 350, would have entered a short. It went down to the low of the day, which, it was at 270-ish, whatever. Not low of the day. This is low of the morning. But notice when we got to, I think this area here around 250, 260, it was like there was a June level. You can notice on the bottom how we have so many bar markers. And these are bullish markers, okay? And each candle we kept holding and, getting more of these bullish markers. So it looks like buyers were basically stepping in, trying to find that floor. And you can also see how we started gaining delta. Yes, we had a candle here with negative delta, candle here with negative delta, but then we got slapped with a bigger candle or, more delta. So it would be, for me, I mean, if I scalped it, I would have scalped it up to this key level, for longs. But what I would want to do is wait to see what happens at my key level. So up here we went and kept trying to push over, came back down, go back up. It's like these candles tend, minus 138, 168. It does not look like, see how like this candle here went a little bit above this one. And then so that wouldn't be, for me, I would want to make sure to see that we are like, if we had another candle down here, then it would be more, I would take a short. But because we just kept kind of playing at this level, this one closed higher and, had the, see, this candle high was 364. It closed at 357. Next candle, it closed, at 350. So it was closing kind of very close to what it opened at. And then when we saw that this candle is breaking above these, this would be the candle if we came back, you know, and retested. So low was 367 to take longs. Okay. Let's see. Here's another one. We came down, retested that 353 level again. So, yep, sorry, we came to 355. It was $1, a point and a half away from my key level, but we came down, we held. Now see how we had a bunch of these bar markers in the bottom? And even here we try to have, you know, more so than at the top. So buyers were already stepping in trying to hold, okay? And this is basically a sweep. So you can see on the bottom where we had like volume, 1200, 1300, 1000, and then all of a sudden we almost doubled. And then, you know, then we went up to 36 and it was more buyers coming through. So that would be our cue for longs. So that's kind of how I read my order flow footprint. I don't, like I said, even, hang on, actually, let me pull up Onyx quickly for you guys to show you. Here's the stacked imbalance that I told you guys about right here. So see how we had that stacked imbalance and what happened to the price? It went up. Okay. Here's another one down here. It came down, stacked imbalance. We went up. Now, this stacked imbalance was at around 28 to 30. We ended up going up to whatever, 28,304. Came back down. This stacked imbalance was like 28,263. It ended up going to 28,330. So on this stacked imbalance, so even if you're just looking at the stacked imbalance, it like really is a good, it's a pretty good indicator, I would say. But you can, where do I find that little thing right here? You can, you know, change these settings. So I just kind of, I like to have all of mine on my NinjaTrader one, because when I see that we have even, you know, like we just have a lot of bar markers on the bottom, it just signifies that, you know, I mean, obviously one, the more bar markers, the more, you know, bullish it is if it's on the bottom. If it's on the top, then the same thing applies, you know. So that's just the way I kind of look at it. I don't look at every single bar marker and candle, you know, when we're moving. I just look at it from my key levels, because my key levels are pretty on point, and that's just extra confluence that I see that, you know, buyers or sellers are stepping in at that level. So okay, market makers calling me. I am your market makers mentor. I'm gonna start saying that. No. So do you guys have questions? Let me go back through. Have I started using the new beta of Onyx? So because I trade most of my accounts on, you know, NinjaTrader, I've used this. I have looked at, you know, Onyx. I would say that Onyx is a great way for you guys to kind of just dip your feet in. You know, it's free. I mean, if you have Rithmic accounts right now, or if you even get like a Rithmic account through any of the prop firms that you get, you can just log into save this little website that I posted, bookmark it in your browser and go there and log in, and you can kind of watch this. The bar markers are on this, sorry, not the bar markers, the delta, even if you're just looking at delta, and also point of control, because it will tell us, where you can actually undo all of these. If you don't want to see them, you can add them, you can remove them, whatever, all off. Add just a few certain ones that you're always looking at, whatever it is. But this works right off of your browser, so you don't need to have, NinjaTrader or anything else. The one that I use, I just showed you guys, just with the stacked imbalance, how well it works. And this prints as we are trading, you guys. This isn't like, so the difference is, okay, let's say you're using moving averages. I use moving averages, but let's just say that's what you're using. Well, moving averages are lagging indicators, and most indicators are lagging indicators. This is not lagging indicator. This is real time reading these are trades that are happening in real time. Okay, so there's nothing lagging in here. So when you start to kind of watch it, you will see, some bar markers that just work better than others, and especially like around key levels or whatever. Look at the delta, whatever. Go to that little order flow course that I showed you guys. Go to propfirmtrend.com and put in, or click on the little more drop down, and it's going to say order flow course. Just, it's not like in depth by any means that I teach elsewhere, but it will get you guys the basics and help you guys to see if this is something you want to explore. I will say, for example, when I go on vacation, I don't trade anymore. Rarely ever. Sometimes I'll take a trade or so, but I just noticed that, to me, when I have my order flow footprint, it gives me more confluence. So when I'm trading, I have a 17.5 point stop loss, and yes, I'll get wicked out at times, and it's still going to go in my direction. It's happened, actually yesterday it happened, and then it ran 100 points or 200 points, I can't remember. But the point that I'm saying is that a lot of times I can get away with not a whole lot of drawdown, even less than that 17 points, 17.5 points. And my take profit starts at, at that time, at that level. So I know people say, like, and I've seen this on X, they'll say, oh, your entry isn't important. Sure, it's not important if you're using one MNQ and you've got, $4,000 drawdown, but I would, anyone that has, 100, 200, 300 point stop loss does not have a good entry. I don't care what anybody says, that's not a good entry. And to me, using, what I use with order flow footprint, it just gives me that less drawdown. So I can get in and get out faster. I can kind of see, sometimes there will be times, especially like if you're scalping, trying to get in and out, you can scalp your way through with some of these, just by looking at the order flow footprint. And it doesn't have to be, 100 points, 200 points, whatever. It could be 20, 30, 40 points getting in and out just by seeing something in depth of the candle versus just looking at the regular candles. So it's, I don't know, let's see, where did I turn these? Default. structure levels, so you can adjust all of this to your liking. You don't have to have everything on here, but that's kind of how I would look at it. So it just kind of helps with me. It helps make that decision. So like yesterday, we took some shorts here towards the end of the day. I was actually teaching the order flow footprint, and then I walked them through the trades, you know, and I said, I think we started watching from like up here. I said, if we drop, you know, below, so on this one, we didn't flush. Now this one ended up closing below, which to me was a good indication that we were going to probably continue down. And then we had, we started to get like small, like negative, you know, delta, and we could not get back over this. So we took a short and it came down. Let me see if it shows the unfinished business I was telling you guys about. I mean, it showed yesterday, but I'm trying to see if it's going to show. I think it like removes it, but it's like basically it's just a line. And a lot of times the price returns to that and eats those orders. So I can't see that right now. I think this is right here. This is an unfinished business. This line here on the 5-minute, but we haven't. Going back. But we have not retested that level. So that unfinished business stays there until we go back and eat those. Yeah, up here we've got a lot of those unfinished businesses. Okay, let's see the questions. Okay, it says, sorry, I missed instruction. If I have a Tradovate account, can log in through NinjaTrader, and NinjaTrader will show footprint chart by default, and any data subscription or anything. Could you please repeat? Oh, hi, good morning. Thank you. So this right here is a third-party add-on, and it is from Trade Devils. This is the first one I bought. Here, actually, I posted a link somewhere. The tiny URL. That's what kind of everybody's doing nowadays. Tiny URL. So it's called Trade Devils, and it's just you buy it. They actually have a 7-day free trial. So there you go. So they give you a 7-day free trial. This is an add-on to NinjaTrader, okay? And let me see how it looks like when you go on there. I don't even know how much it is right now, to be quite honest, because I bought mine. Oopsies. So this is the one that I have. Okay, so it's $459. If you like, I have a lifetime license of it, or $55 per month. But they do, like I said, have a 7-day free trial. The order flow that I have, like this is my template. This is not a default template. So, and I do give my template to my peoples, to my community. Because like I said, everybody trades order flow footprint differently, and the way I trade it is different than most. And if the way I see anything that you do, whether it's or any technical analysis that you use, if you can replicate that day in and day out, then that's a good strategy. Okay, and execute on that. If you don't know what you're doing and you're switching up every day, every other day, it's not going to work. So find something that works and stick to that. So Let's see. I gotta scroll back. Hang on just 1 second. Oops, what the hell am I doing? Alrighty, just a second, guys. Good morning. F the troll. Sorry I'm late. Got the first 30 minutes. Oh, that's okay. Thanks. I do need to stay hydrated. How do Tradeovate people access footprint chart? If you go to Tradeovate and log into your Tradeovate, guys, I think that they do have a order flow. That's actually where I saw the first time the order flow, but it's like very, very, very basic. I don't even, at the time, at least, this is 4 years ago, guys, they did not have any of the bar markers, anything, you know, of these delta or anything like that. So that piqued my mind about, you know, looking at the orders and the tape inside. So the key levels, okay, hold on a second. For key levels, are you basing them off like HTF support and resistance or like huge imbalances? So I have a very basic technical analysis that I use. It's in my go to see if I can pull it up. Okay, so this is my technical analysis that I use. I use moving averages and I use pivots. I also do use a few other things. I do have an indicator that's, you know, free. I can send this to you guys. So this is basically just what, you know, the key levels that we have, which tend to be, let's go to 15-minute, you know, the you know, like the same stuff most people look for: previous week low, you know, IB, pivots, moving averages, you know, yesterday's high, yesterday's low, that kind of stuff, right? London high, London low, Asia high, Asia low. So those are like, you know, just on my chart, because they, no matter what, it's in their key levels. So, but I also have, I use EMAs. And the thing about EMAs is that I would say that a lot of people don't know how to use them properly. I know some people just use 9 and 21, which technically those are just trend trades. But when I use my order flow footprint, I use it around, you know, so if I am looking, if we're approaching a key level, which those are going to be my pivots. Those don't change throughout the day. They're going to stay the same. So when we come to those key levels, that's where I'm going to be watching to see what happens. But let's just say I'm watching moving averages, okay? So I don't know, let's just go to the 5-minute. Let's say I want to scalp EMA 9. So this here is EMA 5. Notice how it just, you know, we were just kind of coming down. But when we went up here and retested EMA 9, this blue line, and retested it again, what I would do in this sense is go to my order flow footprint. Let's see, what time is this? Okay, 13:55, and see what happened, you know, at this time. And if we got okay, 13:55. Let me see this. Okay. Oh, come on. Okay, so I have my key levels up here. Is it 13:55? Yes. Okay, so see, when we got to this blue line, EMA 9, not only were we below the moving average, or I mean, not moving average, key level, but when we got to EMA 9, look at what started happening with the delta. First here we had, you know, minus 166, and then it was 132. So like this is not a trade, you know. But you kind of continue to watch. Well, we then went to 1, okay, then we went to minus 50, minus 279, you know, minus 337. That will show you that the, you know, sellers are winning, and that's where, you know, you want to see, like for me, the biggest thing would be like this little arrow down, which is that delta delta drop. And what it means is, go here. No, that's not where I want to go. I'm just trying to show you guys where you can like check it out without, no, not delta sweep. Okay, so delta drop means 4 consecutive bars with decreasing delta. Okay, that's that little arrow right here. Okay, notice how we started getting decreasing delta here, and it typically you know, shows buyers or sellers, shows the trend, that trend that was going up, you know, is basically ending, and expect a consolidation or reversal. So we're getting, you know, less delta, and that's kind of, if it's around my key level and, you know, I'm comfortable getting in and out of, you know, for example, EMAs, then that would be a short. I don't know if that makes a whole lot of sense to you guys. Okay, let's see. Okay, if delta is heavily positive but price fails to make a new high, how do you confirm whether passive sellers are absorbing the buy flow? So basically, heavy positive delta is basically the effort. So no new high is the missing result. So that combination alone, you know, is your suspicion. And buyers are spending fuel and they're not going anywhere, and someone is selling them everything they buy. So you can, you know, the way you would confirm is, you know, you look at the footprint, rows at the highs. You want to see that, you know, big cyan numbers printing into the level with, while that diagonal ratio die, you know, below 1 time. And then aggressive buying running into bids. So into resting sellers that are bigger. That's the wall showing itself in the prints. And then you want to also watch for the point of control. You know, if it stays pinned right at the highs, candle after candle, while price makes no progress, that's a wall, you know, that's doing business at that specific price. So real breakout buying drags the POC up with it. Absorption nails it in place. And, you know, you want to see the delta flip, so real absorption resolves when the trap buyers give up, the next candle delta flips negative, and price rejects the level before the flip. So you kind of have that theory and the confirmation, but on the opposite case, so you don't get faked out, if pullback stays shallow and sell delta stays weak, the price keeps going to that level. That's not absorption, that's just buyers reloading for the break. Okay, so positive delta plus no new high raises the alarm, but you can kind of see here, in the bar markers, you can show trap traders, show delta trap, all that kind of stuff shows on here. So like I said, you don't need to calculate anything. You don't need to even see the numbers in here, because for example, TP, you guys can kind of see here, TP, thin print, it shows up almost in every candle. That's just noise. You don't need to, but when it shows up with a bunch of other stuff, like here, for example, let's see how many bar markers we have here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bar markers on the bottom, and it still couldn't push the price up. So it's not always, the well, I mean, I guess it did push the price up a little bit. The low was 276, it went to 310, 312, but it reversed right back down. So again, like I said, the way I look at my stuff is really around my key levels, and that's check out Rizzo. One thing with let's see, hold on a second, let me go through, just make sure. I didn't miss anything. Does an imbalance at the edge of value area mean the same thing as an imbalance in the middle of the range? So that's a good question, actually. The short answer is no, they do not mean the same things. The math is identical, but the location changes everything. So think about where you are, the middle of the value area is where both sides already agree price is fair. But an imbalance printed there is usually just rotation noise. So one side want a little tug of war, but they're fighting in the middle of comfortable territory, so there's nothing to break. Those imbalances tend to get, faded. Now the edge of value is different. That's the decision zone. So price only leaves value when someone forces it out. So an imbalance at the edge is a vote. Someone with size is actively trying to change what the market considers a fair price. So if it stacks and price follows through it, that's initiative and real breakout behavior. So if it prints and gets absorbed, that's the edge being defended, and price usually rotates back through the whole range. So so same signal, different way, middle of the value. Interesting, rarely readable or tradable. Edge of value, you want to pay attention. That's where that range lives. So you can see that in candles, but are you scalping 10 to 15 points, or are you looking for bigger, longer plays? So Fenster, it depends, well, there's a few things that, it depends. Again, when I look at my order flow, or when I look at my levels, and you've seen this before. Let's see. Okay, so more times than not, so these are I'm gonna do it on the hourly, but my key levels, let me go here. more often than not, we see price on NQ move between, you know, S1 to pivot point, or from pivot point to S1, or from S1 to S2, right? So if you can get a good entry, in, you know, you're using your order flow footprint to kind of get into that, you can enter a trade, and if you're sized down quite a bit, you can pretty much try to hold for, I mean, lately, like, so right now, just looking at yesterday and the day before, these are really far away. So I wouldn't, you know, try to sit around and have a, you know, have a go the whole time, but or try to make that whole move, just because, you know, this key level is at 27,968 and this key level is 28,353. So as you can see, most of the time you can still get 50, 100, you know, 200 points if you, like I said, if you're sized down low. You know, the way I trade, I like to get in and get out. I do go in with a little bit of a heavier size, but at the same time, you know, precision in getting in and getting out, and that to me is, you know, with order flow footprint. So my first take profit is always going to, because I have a 17.5 point stop loss, that's going to be where I unload most of my contracts, and then I'll keep runners. And sometimes I've had times where a runner will go 100 points and then it comes back and, you know, I get stopped out at 60 points or whatever. So you just have to kind of, I mean, see what kind of a trader you are. I trade obviously differently than others, so it just, whatever works for you. What time frame do you find gives the clearest footprint picture without creating too much noise during the fast market moves? So again, when I am, you know, trading, I look at my key levels, which is going to be, you know, either the EMAs or the key levels. And what I do at that point, I do have the 5-minute up on footprint, but I look at the 1 minute because, oops, I need to move this over. Why is it doing this? Okay, so I look at the 1 minute because I want to see, you know, in each candle what's happening. What, you know, what is the, what's the delta? Are we, you know, losing, gaining, whatever it is, especially in fast moving, compared to, you know, on the 5 minute, you can see, you can still see like your candles and stuff, and that you are looking at. Like, I look at the 5 minute chart for my entries. So if I'm trying to get in on moving averages, it's going to be in the 5 minute, and then which tends to correspond with the other moving averages that I'm using, like on the 15 minute. So to give you an example, EMA 200 on the 5 minute is equivalent to EMA 65 on the 15 minute. So what I do with the 1 minute chart is really just to see what I'm going to do when we get to that key level. So if you see a couple of candles, you know, trying to, you know, hold the price, that's kind of, you know, your key is they're trying to, you know, that's support. Or if you see candles that are, you know, you see negative delta and they're rejecting and rejecting, then that's going to be more of a cue that, you know, the market's going to start to reverse. Oh, thank you, Patrick. I said, Traders Wealth Lounge, join the Discord. It will change your trading journey and life if you put in work. Yeah, I mean, you know, I will say this, guys, that no matter what you do, I don't care what Discord you're part of, what, you know, community you're part of, if you don't continue to learn and learn on your own, and it will take time and it's going to be hard. I don't know anybody that, you know, came in and was like, hey, this market is so easy. And the thing is, it's like, it's easy, but it's the hardest thing you've ever done. Like, I don't know how to explain it. I think it's that mental psychology, really just continue to learn, and also know that this is not an overnight thing. I think that a lot of people believe a lot of money can be made in the markets. There is no doubt about it. And people make a lot of money, but it also is not an overnight thing. It's not a 1 month thing. It's no matter, like, I've been trading since 2019, and I'll still have, weeks or a month where I struggle, whether it's like psychology or whether it's like my technical analysis, something had changed. I don't know. But that's normal, because then you're going to have 3 or 4 months where, you're doing amazing. So that's the one thing with trading, is that not every month, not every week, not every day is going to look the same for you. There are times where I come into the market and I snipe every single freaking trade. And then there are times where I come in and I'm like, I lose one trade, second trade, third trade. And it's like, you have to just kind of walk away because it's just not your day. Yeah, of course, the market regime changes every few months and you have to weather the storm. And what you also want to do, I always say, is to keep your, the biggest thing you can do is hold on to your capital. Okay. Oversizing, over leveraging, whatever you want to call it, is going to get you out of this faster than anything else. I've lost accounts. I can't even tell you how many, just by oversizing. Sometimes it's accidental. Like, I'm thinking I'm on MNQ, I put in 15, and then all of a sudden I'm like, shit, I am on NQ. And, like, just with the breathing of the market, it's going to kill you, right? The point that I'm trying to make is that there are a lot of concepts within trading. It's not just technical analysis. It's not, you can always better your technical analysis and price action. Reading price action, reading order flow footprint is going to be something that, if I was to start again, I wish when I initially started trading that I, first off, that I went to futures instead of, I did crypto, which actually I made quite a bit of money. I did penny stocks, and I did options where I burned through 220 grand of my own money in 1 year, in 2021, playing with options, basically gambling with options, 0 DTE, expiring worthless. So, at the time, it was like that dopamine, like, oh, let me just get in and I'm going to make a shit ton of money today, that kind of a mindset, instead of thinking, if I want to stay in this game, I need to learn and I need to be consistent. There's nothing, there's no shame in making $200-300 a day. I think everybody's different. I've seen, a lot of times what people are trying to do is they compare themselves to someone on Twitter or Discord or whatever it is with the P&L. Don't do that. I promise you, it's going to rob you in your capital, because you're going to get FOMO. You're going to, oversize. You're going to take more trades. And the less you look at that, the more consistent you're going to become. And the more consistent you become, the higher your P&L is going to become. So, anybody can flash, the money. I just feel like it, and I didn't understand this before. It comes from, my mentor. He's a retired market maker, who has said before, and this is like, when I started trading, we do not talk about money in here. We do not, did you, were you red or were you green? And are you consistent? And it didn't really dawn on me at the time, because everybody was, posting P&Ls and this and that. And to me, it was like, yeah, it gives me motivation, this and that. But it more so, more often than not, I found myself having FOMO, trying to, do what somebody else that's been doing it for 10 years is doing, for example. And, it just cut that noise out, guys. And, size down until, your goal is going to be to learn technical analysis and to have good executions, whether it's for entries or exits or both. And number two, just keep if you're sized down, you're going to be fine. Just keep doing. Don't even, if anything, play on a stim account. Don't even think about the money until you're good at getting in and getting out, getting in, getting out, reading the market, because that money and then your scaling higher is going to come on its own, so that's kind of, let me see. Yes, it is hard, but the benefits are forever. It will be the hardest thing to accomplish, but you have it for life. Nobody can take it away from you. Absolutely. And he says, this is better than having a college degree after you learn it. Just my thoughts. Yeah, I mean, I have a 4-year degree, and I'm not doing, what I went to school for. So this to me is like, I every day I think you guys hear me singing, I'm on vacation because I love my occupation, and it's really true. I don't feel like this is work. This is fun to me, and I don't know if I'm a little... Giveaway will be soon, guys. Hold on. Let me see if there's more questions. Oh, okay. I forgot to read your guys's here, and sorry, on Discord. Hang on. Let me go back through. Okay, let's see. Also have TradingView with footprint candles, lies. Yeah. So guys, if you do go to TradingView and you look at the, let's pull that up. I'm just going to open up a new one. I'm going to show you guys. This is not order full footprint. Hang on. Okay, so if you go to TradingView, why isn't anything pulling up? Oh, it is. It's just tiny. Holy crap. Did you guys see how much you have to zoom in? The thing with this is you actually have to zoom in because you don't get any bar markers. You just have okay, this is so weird. I'm getting so many calls. So this is the so they have one right now and they've added it, but it's my understanding so this is just a basic one. It does not have any of the bar markers or anything like that. My understanding is the TradingView does not have tick replay, or did they just get that? Does anybody know? Somebody said, what is AI slop? I don't know. Someone commented on my video or whatever and said that this is AI slop. So meaning that I made this with AI. I'm not a trader. I just made this with AI. I'm like, okay, well, I don't know. If I could make this stuff with AI and fake this chart, then I don't know. What size deval do you typically trade? I usually trade the 150K. because I get a lot more drawdown. And to be quite honest, I like the bigger accounts, 150K, 200K, 300K. Attis, you can set what absorption and balance ratios you want. Yeah, you can set that same thing with Trade Devils. I just don't. Well, maybe I do. I don't know. But see, there are settings in here, and you can set and change whatever you want in here. So somebody says, to me, order flow and bookmap are so confusing. So agree. When I, like I said, when I first started with order flow footprint, it looked like the Matrix to me, and it was like, I'm never going to learn this. And then another thing was that I would try to like predict every single candle, like, oh my God, we're going up, and oh no, we're going down. And, it was kind of like until you kind of just sit back and, say, okay, you know what, I don't care what every single candle is doing. What I care about, what it's doing is at my key level. And what we, look at that point, like I said, even if you have just the basic, that doesn't give you all of the, what do you want to call it? But it doesn't give you all of the bar markers. You can still see, the delta. And I don't know if you, Steel Toe Man, I don't know if you were here when I started, when I did the whole webinar, but it will be, it's recorded, so you can go back through and kind of read it. Yeah, and it's not for everyone. For me, Bookmap, I'll be quite honest, is, you get orders at certain places, like 1,000, and it's just spoofing a lot of times, and it gives you that bias, like, when it, at the end of the day, that's not a, it's just someone placing a limit order, and they can move it and remove it at any point. That it's not, like order flow footprint. These are actual trades that have already been made. Okay, let's see. Let me grab a drink of water and then I'll be back again. Sorry, guys. Also, I need to check on these phone calls for my family because great job teaching things. Much better analogies like house party when people spend most time in. Yeah, so I'm trying to like relate to most people. I've seen, a lot of people teach and it's not broken down in plain English. So it's just gonna go over people's head at the end of the day. And when you dumb it down to plain English where we can all understand really what's going on, I think that's the best way, I suppose. But it's not, let's see. Hang on, let me see, my brother texted back. So I'm asking everybody's an emergency and everybody's like, no, I just apparently didn't tell them that I'm gonna do. Okay, let's see. How does this deal with stop hunts or market makers trying to move the market in another way in New York Open? So, okay, well, that's a good question. So the footprint doesn't stop a stop hunt. Nothing stops it. What the footprint does is let you watch it happen in real time, so you're not the one getting hunted, I guess. But all right, let's think about what a stop hunt actually is. So basically, big players need a lot of like buyers or sellers to fill their size. So where do orders pile up? typically just above obvious highs and just below obvious lows, but that's because everyone stops. It's not that they, typically everyone stops sitting in the same spot, so at the open they push price into these pools, and that's when those stops fire. It's not that they can see your stops, but they know, so let me give you an analogy. If you look at EMA 50 and EMA 65, you're going to see that EMA 65 fires off better than EMA 50, and it's because the big players know that a lot of people use EMA 50, but where do those people place stops? They place it, at where they place it, it ends up kind of being like it's at EMA 65. So that's like where you'll see it trigger more versus at EMA 50. Same thing, a lot of people use EMA 21. If you put EMA 30 on, it's a better place, more precise, because when you place your stops, you're not going to place it around EMA 21. You're going to place it around, it ends up being like EMA 30, 33, something like that. Same thing with EMA 200. Or even like on pivots, you guys will see where stops, it will go down 10, 15 points sometimes. Again, stops. One other thing, you guys can see this happening. Go back through your charts, and you don't have to believe me. Just go back through your charts. They're called bill breakers, or mental levels. So let's say 28,300, 28,400, 28,500, 28,100. Those are like mental levels. Okay. What you're going to see is the price goes down to, for example, instead of 28,300, it's going to go to like 28,290, 28,285, and then reverse back up, because they know that that's where the stops are going to be placed, or there's orders there. Same thing, like 28,000, let's say 315 or 320-ish. They'll go up to that and then like reverse all the way back down. Again, that kind of tells you, because that's where most people are putting their stops. So, on a normal chart, the push looks kind of like a breakout, but on a footprint, it looks completely different. And the way we would kind of look for is, the break happens on heavy volume, but the delta is not confirming. Price is above the high, and the scoreboard is weak already, so or flipping already, and real breakouts have conviction in the delta. Stop runs don't. So also absorption right at the extreme. So you're going to see, like, for example, big cyan numbers printing at the very top, and price just stops. So that's where the it triggered stops, and that's where that wall of sells happens. So absorption, and then also the snapback, the next candle or two, that delta flips hard and price closes back inside of the old range. So now those people that trapped it or chased it are trapped, and their exits are fueling the reversals. So basically, you want to mark. When I trade New York session, typically the open, which I do, I wait for the first minute or two to kind of go, let the algo settle down, and then I will look to see. Let's see yesterday, 8:30. This is a 5-minute chart. I usually have like 1 minute, 5 minute, 15 minute, an hour. But in pre-market, I do check, the higher time frames. But if you see, when we opened, we went up and rejected. This is EMA 30. We rejected, and I would be looking at my footprint to see if we're getting negative delta and possibly any other stuff. And it, pulls it back. And that's, you know, I would enter my trades there. Okay, what the frick? Okay, so let's see. Are you familiar with auction theory? All the open doing is auction theory. Okay. Is Onyx something you've been building or just an easily accessed web base? No, I have not built Onyx. Imagine if I did. No, it's I met, God, how do I meet this? I do know the owner or the dev of it. If you like, some of the prop firms actually use that as their platforms, kind of like, you know, Project X or Tradesy or whatever, except the Onyx has not had any bugs like the other ones have. So I think Funded Futures Network was one of the first that kind of launched them over a year ago, or I mean, launched with them a year ago or so. But I met the dev and I actually asked him to build the order flow footprint for my mentees when we were doing the mentorship, so that they can have access to something that they don't have to pay for. You know, Trade Devils, like I said, you can get Trade Devils. It's free for 7 days. And then either like $55 a month, or I think $4.59 is that what we saw a little bit ago, $4.59 lifetime. But you know, you don't want to rush into getting anything unless you are, you know, interested in learning more and kind of watching it and knowing that it's going to take some time to recognize this. You know, it's going to take you a good month or two to just keep watching to get that like muscle memory type stuff. Let's see. I'd love to have the key level indicator, please. Can you just go to the, hold on, indicator, TV indicator request place and put in your trading view. Hang on a second. Trading view. Username. Yeah. So that I can add that later. No, it's not Rocket. It's my, no, Rocket didn't build this. But this actually does have FFMAT built into it. But this is actually just a caution for the FFMAT. Let's see, FFMAT is here, the 15-minute. So we have FFMAT here, and then we reversed. This is more of like a caution we might be getting to that. You just ran the coons. Okay, so Stuff Trader. He said, just want to share something about NQ because of the large range. Looking at QQQ price scale next Jenk, you can help identify more key level on QQQ. Like a whole number on QQQ or 5-point increments can help keep narrative. Like the 700 level on QQQ was a big level. With NQ, it's harder to specify the level because there are so many 100 increment ranges. I agree, Snuff Trader. That is very, very, very true. I just happen to have about 11 different screens. I watch a lot of stuff. I watch the Mag 7. I watch, Dixie, oil, gold, all sorts of stuff. Let's see what else. So it is false values on TradingView when it comes to their order flow. Yeah, I didn't think that they had tick replay. So that's just my understanding, but yeah, so this indicator here, this, is just key levels. Like, I know a lot of people don't, use the NFP, but NFP levels, like for June, look at that. We went up, rejected it, came down. So, there are levels here in this that will just overnight, overnight low, orb, all of that kind of stuff. And to help you, because the market always remembers, guys. Even if we don't know, the market remembers. The levels in a chart, the purple one and the red and green colors. This, oh, are you talking about this? Whoops, no, not that. This? Adam? Because that's not... Calling it AI slop, it does not even make sense. Or do you think footprint charts are real? I guess they think that these charts are not real. I don't know. I'm not sure why calling this AI slop, but whatever. I guess these days everything is AI. I'm AI too. My trading is AI. Let's see. Pivot points. Yeah, so the pivot points also, I mean, there's a special well, there's, okay, if you go to obviously pivot points, there's different kinds of pivot points. This is pivot point standard, traditional. The one that I use is not the auto, pivots time frame. It's not the auto, it's the daily. I remove this, so, but it's built in here, so I don't need to. Yeah, Adam, just go to where is that damn channel? Just go to that channel, put your TV username, and I'll send it over to you. I don't even know where that is. There. Okay. Copy link. Okay, go here. I am very slow at reading this stuff. Yeah, guys, so just go to the channel where it says TV indicator request and put your TradingView username. That's all. Okay, let me go back to my other stream. Guys, I'm learning how to stream. What is your approach to handling drawdowns when footprint signals start giving false breakouts during choppy market conditions? I always have a hard stop loss at 17.5 points. If I get wicked out, and it starts to go back in, during my, so to give you an example, if I got wicked out, let's see, I'm trying to find a place. For example, here, let's just say I was trying to go long. I don't know. Or maybe, nope, I was trying to go short and, it came down to this, whatever, what's this number? 28,430. And then it went back up. I got, I would have been wicked out 17.5 points. Now, if it went back again under my key level and, retested it and rejected it, that's when I would have entered a, so you just have to have a hard stop loss. Nice, mine as I wish was sometimes. Oh. Yeah. So any other questions that you guys might have? I hope this was helpful. Thank you. Taking high volume trades doesn't mean it's low risk. Commissions always matter. I agree. That's why I like to take 1 to 2 trades, if even that, and then rotate my accounts and get out. I don't like to trade anything after the first 2 hours. Typically, I just don't care to trade during lunchtime, even, end of day. And I just like to do it the first 2 hours. That's where the most volatility happens. Make a trade or 2, maybe 3, and get out. Lock your accounts. Last question. When price breaks a daily high or low overall volume but strong localized delta, do you treat it as a fake out or a continuation? Do you treat it as a fake out or a continuation? I mean, can you what is it called? Reword that? Because I'm not sure, like, what your question. When price breaks a daily high or low with low overall. Because, like, I have to see, like, what the next candle does, you know? Yeah, if you can rephrase it, I suppose. But I don't really treat it as either. You know, I always wait for confirmation. At the end of the day, that's why I always say, like, wait for, you know, retest confirmation. Because if it's like low volume, it just means that, you know, the buyers or sellers, whatever you're looking at, did not show up for that move. So to me, that's kind of like suspicious, you know? But it also shows localized delta, you know, means somebody was very aggressive at that level. So the thing is, who's someone? You know, it just kind of, I like to watch for confirmation because there's always retests, especially when it comes to, you know, like, for example, yesterday, let's go to that 200 or 2,200-ish level here, 265, and then I can show you how we see how, like, we kept just kind of basing, and then we had quite a bit of bullish key levels, or I mean bullish bar markers, sorry. It just kind of, you know, it doesn't really tell me anything, just that they're kind of holding the floor. But what you want to do is just, you know, is it just strong delta, you know, for a candle or two? You know, you can't really tell the difference from the break candle alone. So, you know, was that strong delta, is it getting paid? If aggressive buying keeps printing and, you know, price keeps extending easily, it, you know, on low volume, I always say, you know, moves can run fast and, you know, run a long way. So if it's, you know, that would lean obviously into continuation. But if it's strong delta and the price isn't going anywhere, then that's just absorption. Share something on finding high probability levels. So this is what I use. These are high probability key levels. So I can share this in, if you guys want to send me your TradingView names, and when I get a chance, I'll send you guys the invite link. It's free. I don't look for this. This is automatically calculated. I'm not going to pretend I know more than the, you know, institutions who have mathematical calculations for, you know, the key levels. So Why would I, you know, attempt to try to, you know, pretend and draw my own stuff? I mean, I'd rather have something that automatically plots it for me. Like, hey, there's the NFP level from June. All right, well, thank you so much. I don't have to go search for it. Or, you know, like the key levels that I use, which are the pivots, you know, things like that. You're welcome, guys. Let's see. The word you're looking for is elaborate. Thank you. You guys know sometimes I just I run out of words. Thank you, guys. Feel me feel slow. Yeah, go slow. Slow is good. All right, thanks, Adam. I'm just going to post this in that channel so I remember, because that's where I look, you know, when people request it, I look there. So I don't miss anybody. Because like if people are sending it to me in different, you know, then it's a little harder to keep track of who has gotten it and who hasn't. So any other questions that you guys might have? Let me see, anywhere else? Consistency matters. Thank you for the clarification. This is very, very true. And here's a comment from someone from YouTube. It says, it does not matter how smart we are. This takes serious screen time to master. Absolutely. I've been trading full-time since 21. And when I say full-time, I mean, just in the past couple of months is when I actually started walking away in the morning. And then I've kind of resorted back to coming back and just streaming, and I'm going to be teaching more like after my 2 hours of trading, to come back and like teach more and just watch more screen time, because it does take, it's completely different, you know, having that many hours, you know, live forward, you know, it's, let me put it this way, it's different to back test stuff, and it's different, there's a big difference with forward testing. So the more hours you have on the screen watching the markets live, even if you're not trading, I've always said this, just keep watching it. And if you don't have time, you know, you're at work or whatever, go back and there's a little replay button, click replay and let it, you know, do it, watch what happens throughout the market. So you're welcome. Any other questions? Anyone? No? I hope you guys learned, and if you guys like this, you know, let me know, so I'm not wasting my time and your guys' time. I can do more stuff like this. There's a lot to learn. What I taught on order flow footprint is very basic stuff, so there's obviously more stuff to learn, but that's, you know, I'm just going to stick to the basics. I don't want to make your guys' head spin. So oh yeah, the giveaway. Oh, guys, I already forgot. Hang on. Let me find it. Ends in 8 minutes. Damn, only 34 of you signed up for it. I mean, signed up, yeah, entered, I should say. That's crazy. All right. Let's, I'm trying to figure out quick draws. All right. Okay, let's do this. Live draw winner. Okay, I'll see if it's this one. Hang on, I need to. I have two giveaways running. I want to make sure it's not going to pull because they're called the same thing apparently. What the hell? Let me just rename the one quickly. Can I make it 2 winners? No, I already have another one running, so let me just rename it to make sure that I'm not getting the other one. I'm going to put stream on this one. Stream. Okay, quick draws. All right, there we go. I should say stream on it now. Ha, there it is. Good thing I didn't pick the first one because that's the one that ends on Monday. Okay, the winner must be here. The winner is Greg T. Patrick's gonna be like, that's me. I'm Greg. Let me see. Bookmap session. I don't really use Bookmap, but I can have one of my guys, actually Brady, can come on and teach it. I do have Bookmap. The way I look at Bookmap is, even though I got like the most expensive one, it's like 180 bucks a month. I'm gonna be streaming it more so that people can just look at the. I don't know. I look at here. I'll show you guys once it opens up. What I look at, I just look to see like where the, the heat map where there's a lot of orders. But again, we see those orders get pulled. So it's like somebody's flashing a big size and then and it's a fake out. And I don't like, that's what I don't like about it. Greg is my middle name. Yeah, no. Any Gregs here? Okay, so I'm gonna move on to the next. Yeah, repick winner. Sorry, Greg. Daniel N. Sarah Daniel N. Map. Data. Oh, that's you, Solbay? Okay. All right. Ryan uses it also. Yeah, I mean, I use it too. Here, I'll show you guys just to kind of, there is a few other things that I'm going to add on to it. But again, Bookmap is kind of like reading the DOM. It just shows you, like where there's, okay, obviously it's not going to show right now, but like, oh, there's 1,000 orders here, 187, but then at the same time, it like, it can be pulled. So let's say I put on, I don't know, let's just say I'm a whale and I put on 1,000 lots. I'm just kidding. I put on 100 lots and then I'm like, oh, I'm going to go to lunch, and then I just pull it. It really doesn't mean a whole lot. I mean, it can, in a sense, to me, I try to remember that it's not, that it's just there for confluence, because like I said, those orders can be pulled. But right now, I mean, there's no market, so nothing's showing up, obviously. But Matt looks at different stuff, so I'll see if he'll come on and talk about it sometimes. Matt003. So, but it's a good thing, like, for me to stream it, so those, like, you guys can You don't have to pay this 180 bucks, whatever it is, a month just to see orders that can be changed. All right, well, let's see. You forgot. Oh, yeah. All right, guys. Well, if no questions, I will see you guys all on Monday. I'll be live streaming, and I'll be live streaming the order flow footprint from now on, and also kind of switching back and forth between Bookmap and kind of what we've got Rizzo on there and Brady, and gonna be doing some cool stuff, guys. All right. Well, thanks for hopping on, guys. Hope you all have a wonderful weekend. Bye. See you guys.